Welcome back. You're watching Deal Makers, and we are in discussion with Gaurav Gupta as well as with Kuljit Singh of Ernst & Young, and we are discussing whether there is some semblance of deal revival when it comes to the power sector in India, which is quite cash hungry at this point. Gaurav, do you think that one of the primary reasons why two deals happened back to back is also because the stress is so much that the valuation expectations from the Indian companies have come down a little?
I wouldn't say deal making has happened or these two deals have happened because value expectations have come down. I'd kind of position it, say that probably Indian entrepreneurs have become more sensible and practical. There are two reasons which are driving deal activity. I think one, clearly there is in some cases balance sheet stress. In many other cases, I think the entrepreneurs have realized that their core competence is development. And probably once the asset is developed, it's probably in their interest to kind of churn the capital.
So, Kuljit, what is your view of the foreign investors when they look at the power sector? Are they finding the valuations attractive now?
See, there is a common misconception in the market that foreign investors are looking at valuations. The first point that foreign investors look at is basically risk mitigation. They are really concerned about the risk profile of projects. And therefore, they really do not mind giving good values for assets which are low risk assets. As far as Indian developers are concerned, they never go in for distressed sale of assets. So there is no question of any deal happening at distressed valuations in the Indian context. Frankly, there is no pressure on any Indian developer today to get into transactions at distressed valuations. So on one hand, you are looking at foreign investors who are concerned about low risk assets. On the other hand, you have Indian developers who want a good value for their assets. So whenever there is a perfect match between the two, you find that transaction is happening.
But Kuljit, while you are saying that good assets are all that the investors are looking at, well, not many really fit this bill though. You think a large chunk will still remain unsold after this wave that we are seeing of some of the deals happening?
Yes, so what will happen is not all the sellers in the market are going to end up as buyers. But there will still be a reasonably large number of sellers who will find buyers for their assets.
Is this your thought process too, that there will be only few which will be left out and the others would be sold, or is it the other way around in your view?
So I think I want to take this question a little differently. When you say good assets, I think the problem that we have as a country is how can we make the bad assets into good assets? And if we can do that, I think all projects will find investors. What we need to really see is, and I think Kuljit alluded to this fact, I think the key issue is risk. If we can mitigate the risk with the right policies, I think all the not so good assets that you talk about will all become good assets and will all be attractive for investors, because I think fundamentally everybody does agree that power, we are a country which is really power deficit, and we will continue to be one for many, many years to come.
So are you also probably hinting at some of those regulatory framework which may also include some of the debt recast in an easier form so that these particular projects become more viable, apart from the fuel linkages, which is the biggest problem?
Oh, absolutely. I think we find so many projects which have been stuck midway on account of various regulatory issues, and for these projects to become productive assets again, I think you will need helping hand from the institutions to make this into a viable commercial venture.
We will land up with a scenario where the international money, and while Indian companies want that dollar inflow to come in, they will land up buying most of the good assets, and the Indian companies will be left with the distressed assets and will actually sell their prized projects only to feed the unviable ones.
So I think by good assets, I think we are referring to assets which are built. So from a foreign investor perspective, and I think this even applies to Indian companies wanting to go out, anybody wanting to come into India, given the stories that one hears about in India these days, clearly an existing operating built asset is a low risk asset. So clearly that becomes a preference. So given a choice as a foreign investor, will I look to buy an under construction or under development project vis-a-vis a built asset that's available? Clearly, I think the preference would be to buy a built asset if that built asset is available.
Right, so you're clearly saying that that could be one of the scenarios. But Kuljit, could we also see some domestic M&A in the sector? Is there enough interest by any of the big houses?
See, domestic business houses, the large business houses are now looking at power sector because they perceive it to be a good entry point from their perspective. But most of the other business houses are themselves stretched, and unfortunately power sector projects are highly capital intensive, and therefore most of the Indian business houses really do not have the funds available with them to pursue such large projects.
How much do you think that elections will play a role in these deal dynamics? Do you think that now sellers would wait and watch, anticipating that the valuations go up and things get better, and at the same time the buyers would like to time it correctly so that before the valuations go higher, they try to strike a deal right now?
So I'm not sure if anybody has a crystal ball to see, what's going to happen in the election. I wish we knew, and whether
What
overnight.
are your clients telling you? What is the sense that you're getting from them?
So I think the general sense is wait and watch. It is a big event, probably the biggest election that everybody is so eagerly waiting to see.
Kuljit, are there any triggers that the buyers and sellers are waiting for before the M&A really picks up in the sector?
See, I think there are two triggers which people will really look forward to. One is that all the foreign investors who already put in money into the Indian market need to have a good experience of their investments. We cannot simply afford to have a repeat of what happened with the private equity funds. The second trigger that that investors are looking for, that historically in the last couple of years the government policies have been positive and the government has taken steps to ensure that the problems surrounding the sector are rectified.
So Gaurav, of course, there are lots of issues and problems that the government also has to bring about changes in. Now, but still some deals have happened. How much of a pipeline are you seeing? How busy are you?
So as bankers, we are eternal optimists. We are hoping we can continue to do deals, and fingers crossed, I think the pipeline looks reasonably robust.
All right, all the best to you on that. And so that was the discussion with Kuljit Singh as well as Gaurav Gupta, and the kind of conclusion that both the gentlemen have come up with is that, yes, there can be a lot more deals in the power sector. Of course, there are value picks that the investors are looking out for, but there are also lots of issues to deal with. With that, we wrap it here on this edition of Deal Makers. Thanks so much for tuning in, and keep it with ET Now.